Good day, friends. We have a brand new amazing video on a beginner's guide to Bitcoin, everything you need to know about it, for you today. Therefore, like the video and subscribe to our YouTube channel before it starts to see more. Not a single week goes by that Bitcoin isn't in the news. However, unless you're a trader or interested in cryptocurrencies, you probably have no idea what it is. Then why should you worry about Bitcoin and why is it making so much news? It can negatively affect the money you have in your pocket despite being widely regarded as the financial industry's future. How big of an impact it will have on the latter is debatable, but one thing is for sure. Bitcoin is expected to remain a constant in the news cycle for a very long time, despite its erratic price spikes and falls. By acting as money and a means of payment independent of any one person, group, or entity, a cryptocurrency like Bitcoin eliminates the need for third parties to get involved in financial transactions. It is available for purchase on numerous platforms and is given to blockchain miners as compensation for their efforts in verifying transactions. Since then, it has grown to be the most well-known cryptocurrency worldwide. What is Bitcoin? The domain name bitcoin.org was registered in August 2008. This domain is HoysGuard protected today at least, which means the person who registered its identity is private. Announcing a new electronic cash system that is peer-to-peer and without a trusted third party on the cryptography mailing list at metsdao.com in October 2008. Was a person or group going by the name Satoshi Nakamoto. This now famous white paper, Bitcoin, a peer-to-peer electronic cash system, which was posted on bitcoin.org, would go on to become the Magna Carta for how Bitcoin functions today. Block 0, the very first Bitcoin block, was mined on January 3, 2009. This is also referred to as the Genesis block and contains the text. The Times 03/Jan/2009 Chancellor on brink of second bailout for banks, which may serve as both relevant political commentary and as evidence that the block was mined on or after that date. So how does it function? Bitcoin is a virtual currency or cryptocurrency that is not connected to a bank or government and enables users to make anonymous purchases, even though it is always depicted as a physical coin. Users mine the currency by using their computational resources to validate the blockchain-based transactions of other users. They are compensated with Bitcoins. Additionally, the coins may be purchased and traded on exchanges using US dollars and other fiat money, the physical money we use every day in our bank accounts. Bitcoin is accepted as payment by some companies and few financial institutions let their clients use it in their portfolios, but overall popular acceptance is still quite limited. Bitcoins are essentially digitally signed lines of computer code that move from one owner to the next. Due to the anonymity of transactions and ease of moving tokens across borders, money is favored by libertarians as well as tech enthusiasts, speculators, and occasionally criminals. Bitcoins must be kept in a digital wallet, which can be offline on a hard drive, using specialized software or online through an exchange like Coinbase. Only 21 million Bitcoins will ever be created, according to cryptocurrency exchange Coinbase. And approximately 18.7 million are already in use. Nobody knows why, and it's also unknown where all the Bitcoins are. How was Bitcoin created? It's a puzzle. A person or group of people going by the moniker Satoshi Nakamoto created Bitcoin in 2009. Following that, a tiny group of enthusiasts accepted Bitcoin. As Bitcoin gained tremendous interest, Nakamoto disappeared from view. However, supporters assert that it doesn't matter because money follows its internal logic. Who utilizes Bitcoin? Through platforms and apps for cryptocurrency trading, anyone may use, purchase, and trade Bitcoin. It's improbable that you will be able to afford to buy even one Bitcoin token, though, unless you currently have tens of thousands of euros. However, you may invest in shares. There are smaller Bitcoin denominations dubbed Satoshi after the creator of the cryptocurrency. Bitcoin is worth 0.00000001 Satoshi. Bitcoin has been strongly supported by the digital payment business Square and its CEO, Jack Dorsey, who also serves as the CEO of Twitter. Bitcoin is also accepted by Overstock.com and the oldest bank in the US, BNY Mellon, said in February that it will also take digital currencies as payment for its clients' services. Additionally, MasterCard declared that certain cryptocurrencies would begin to be supported on its network. According to the Bitcoin wallet website Blockchain Info, Bitcoin has become so popular that an average day now sees more than 300,000 transactions. Even so, it is not as common as cash and credit cards. Why isn't it utilized more frequently? Given that it is unregulated and decentralized, there has been some skepticism over Bitcoin. The fact that it is simpler to track Bitcoin's price than to determine its value explains why so many institutions, professionals, and traders are skeptical of cryptocurrencies in general. Paper money was supposed to be replaced with digital currencies, but that hasn't happened yet. Some banks and financial services providers are participating, while others are not. Extreme volatility has also been present in the cryptocurrency market, where individuals like Elon Musk have used Twitter to affect the price of cryptocurrencies. Tesla CEO Elon Musk revealed in February that the company had invested $1.5 billion, €1.2 billion, in Bitcoin. Tesla started taking Bitcoin payments in March. These activities helped drive up the price of Bitcoin, and Musk also supported Dogecoin, whose value also increased. Musk quickly changed his mind, announcing last week that Tesla would stop accepting Bitcoin due to the potential environmental harm that Bitcoin mining could entail. The announcement caused Bitcoin to drop below $50,000, 42,000 euros, and set the stage for the significant drop in most cryptocurrencies that have recently occurred. Many Bitcoin supporters disagreed with Musk's justification. According to fellow billionaire Mark Cuban, mining for gold has a considerably greater negative impact on the environment than mining for Bitcoin. Is Bitcoin bad for the environment? According to a 2019 study from the Massachusetts Institute of Technology and the Technical University of Munich, the CO2 produced by the Bitcoin network is comparable to that of a major Western city or an entire underdeveloped nation like Sri Lanka. However, according to a University of Cambridge study from last year, renewable energy, largely hydroelectric energy, fueled 39% on average of proof-of-work crypto mining. Making new coins takes a significant time and financial investment because mining consumes a lot of energy to run the necessary supercomputers. As a result, the concentration of mining varies globally according to the availability of inexpensive electricity. Miners frequently use electricity produced by coal-fired power plants in China, where the majority of Bitcoin mining presently occurs. As a result, concerns have been voiced concerning the currency's long-term viability, particularly in light of global efforts to reduce greenhouse gas emissions. Blockchain technology for Bitcoin. A blockchain and the network needed to power it contain cryptocurrency. A distributed ledger, or blockchain, is a common database that houses data. The blockchain uses encryption to protect the data inside. On the blockchain, when a transaction occurs, data from the previous block is copied to a new block with the new data encrypted, and the transaction is validated by validators, or miners, in the network. A new block is constructed and handed as a reward to the miners that verified the data in the block once a transaction has been confirmed, and they are then free to use, hold, or sell the new Bitcoin. The information held in the blocks on the blockchain is encrypted by Bitcoin using the SHA-256 hashing algorithm. Simply explained, a 256-bit hexadecimal integer is used to encrypt transaction data that is stored in a block. All transactional information and details related to blocks before that block are contained in that number. A backlog of transactions is created for network miners to validate. In the Bitcoin blockchain network, many miners simultaneously attempt to verify the same transaction. The nonce, a 4-byte number contained in the block header that miners are attempting to solve, is worked on by the mining software and hardware. A miner continually hashes or generates the block header at random until it reaches a target value set by the blockchain. A new block is constructed so that additional transactions can be encrypted and confirmed after the block header has been solved. How was this video? Do you like it? Give your precious response in our comment section. Also subscribe to our channel.